What is going on with Bank of America and how does it correlate with AMC stock? I mean, you've been mostly and probably watching and listening to something on social media talking about Bank of America going bankrupt and how this will impact AMC, because Bank of America is actually the one clearing and is responsible for the clearing services of the positions held by Citadel. So in case Bank of America were to go bankrupt, then it means this will potentially correlate and result into some of the short positions that they hold, but also some of the issues it might mean for Citadel moving forward and potentially bringing the share price to the moon. But in this video, guys, I want to actually go over this article and discern from what is actually true, what is not necessarily accurate, and why I think we should be really careful with this information moving forward. So let's start. This is the article from frankness.com, and you can see Bank of America has been illegally shorting AMC stock. Well, it's not entirely true that it's been illegally, because when you go to MarketBeat, and this is something I shared with you multiple times a couple of months ago, is that when you look at the top 10 short sellers on AMC, Bank of America, it's there, so it's not something hidden. Alongside Citadel, Advisors, Susquehanna, and Simplex, they hold a little bit over 1 million shorted shares. But I also covered this a couple of weeks ago, and it's about AMC. The same Bank of America actually started buying some shares around $33 a share to what I think is to actually balance and mitigate the losses that they were experiencing on the short position side. Why? Because this was filed back in September 13, so a little bit over 2 or 3 weeks. And actually, this came after they disclosed the actual short position. So I think this happened when AMC was still going up to the $52 a share before going down back to what we are sitting now, around 37. Now, going back to this article, they also mention how Bank of America is on the brink of filing bankruptcy, and why it may happen because they will not necessarily meet the Fed requirement when it comes to the amount in assets they need to have. Well, according to this, as of October 1st, banks in the US, we have 34 banks in the US, will be largely required to hold $1 trillion in capital. Well, it's true that the market is a little bit choppy, and this choppiness comes from what the Fed is going to do. And Janet Yellen mentioned that it can be a risk because hedge funds are overextended in margins, and liquidity might be an issue, causing some financial runs. Well, we already knew that coming into the month of September, but it's actually about this analysis coming from a company name or website named Macro Axis. Okay, and they say when you get into this, they say we do a probability of bankruptcy analysis, and based on their model, the current Bank of America probability is around 75%. But they also state that this probability should not be confused with the actual chance of a company filing Chapter 7, 11, 12, or 13 bankruptcy protection, because they simply define these models based on financial distress and operational condition where a company is having difficulty meeting its current financial obligations towards its creditors and delivering expectations of its investors. So this is just a model based on some indicators that are not necessarily pointing to this happening in reality, leading to this filing to Chapter 7, 11, 12, or 13 for bankruptcy protection. Now, I think Bank of America, being one of the big four of the top banks here in the US, from the retail side and investment banking side, I don't think this, if this was really something where we have a huge likelihood of happening or high chances of happening, I think we would have seen this, reflected on the share price. Because for the last, so far this year, since January, the stock gained 76%. And when you look at the correlation between this stock and another company like Wells Fargo or JPM, or even the ETF on financials following the S&P 500, it's really in sync. So I don't think there's actually a chance for this company, this bank, to go bankrupt, because not only they do have the $2 trillion asset, which is actually double, even more than double that 1 trillion. So I don't know exactly why this was stated in this article. And finally, I think this is what people are actually trying to get at, because if Bank of America, or if a bank goes bankrupt, the FDIC must collect and sell the assets, and then the bank will settle its debts. For AMC and GameStop holders, it means all the shares that were borrowed will finally get bought back, the 1 million shares that were sitting at. Heavily shorted stocks will skyrocket as over-leveraged debt is finally closed out. Now, the very fact that Bank of America, now Merrill Lynch, or back then Merrill Lynch, was the clearing corp, if you want, okay, of Citadel, it's actually true. As you can see here, this is from Citadel Securities LLC, and you can see that on the credit risk paragraph, a substantial portion of the company's option, clearing, and financing activities are with a Bank of America Merrill Lynch subsidiary, BAML. These positions are recorded at a fair value under securities, blah, 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 blah. So you can see that it is true that this Bank of America Merrill Lynch is actually taking care of the clearing and financing activities of Citadel. But again, even though all of these are true, I think the bottom line is this might be a little bit overblown, because not all information pointed here are necessarily accurate, and it's just based on a model. So this is just a what if analysis. So again, please be really careful with what you put out there and what you see out there when it comes to, these big rumors about big companies like Bank of America going down, and hence resulting into the share price of AMC booming. I know we all want that to happen, but again, we have to be really careful.